Yes guys, so now that we have understood IND AS 23 in detail, we did discuss about all the provisions of the standard and also we have discussed about the ITFGs related to the standard. Now you are enough equipped to start attempting the illustrations and the workbook questions given as far as your IND AS 23 is concerned. So let's move into the order. First we'll solve the illustrations like we always do. Then we'll move into the workbook. Then the additions to study material which happened in 2021 as per your module 4. And lastly, your module 6, that is your compendium of solved illustrations. So let's moving in the same order. Let us start with first. Let's look at the illustrations first. First one is illustration number 1. ABC Limited has taken a loan of $20,000 on 1st April for the construction of plant at an interest rate of 5% per annum on annual basis. On 1st April 2021, the exchange rate of the currency was 45 rupees per dollar. So guys, what is the paragraph that he is trying to apply? The definition of borrowing cost, exchange differences to an extent they can be regarded as borrowing cost. The exchange rate on the reporting date of 31st March is 48 rupees per dollar. So there's an increase in the exchange rate by 3 rupees. I told you we use IRPT. So we normally assume that the exchange rate shall increase according to the books, keeping everything else constant. Having everything else constant. The corresponding amount that can be borrowed by ABC Limited from SBI in local currency is at the rate of 11% per annum on 1st April 2021. Compute the borrowing cost to be capitalized for the construction of the plant by ABC Limited. Guys, let us assume that this is 1 year and let us try to identify what is the amount of borrowing cost to be eligible to be capitalized towards the end of the year, that is 31st March 2022. So let's start. What is the amount of dollars? 20,000 borrowing, having an interest rate of 5%. Exchange rate at the beginning was 45. Exchange rate towards the end was 48. And what is the amount of loan? Corresponding INR loan would have carried an interest rate of 11%. So let us continue solving. I'm looking at illustration number 1. First, let us look at the US dollar loan. Borrowing in USD. This is what he has actually done. But we'll also have to compare it with rupee equivalent loan. To get this comparison, obviously I need exchange rates. You can simply call it as exchange rate as ER, guys. Till we find. What is the borrowing which was actually taken on 1st of April 2021? The amount of borrowing was actually $20,000. On that date, the exchange rate was 45 rupees per dollar. So therefore, I am looking at an equivalent loan of 9 lakhs. A rupee equivalent loan of 9 lakhs is what I am looking at. Now, what is the interest rate? Rate of interest. The US dollar loan was availed at a rate of 5%. While the rupee equivalent loan from SBI could have been taken by the enterprise at 11%. Correct? So what is the amount of interest payable? Interest payable at the end of the year on 31st of March 2022. at the end of the year, if I'm trying to pay the interest, then 5% on to 20,000, calculate and check. This will be $1,000. You don't need calculator for 5%, guys. Divide it by 20. That's it. If I was going for a rupee equivalent loan, then I would have been paying an interest rate of 99,000. Agreed? But this borrowing interest is in dollars, correct? While this is in INR, which is rupee terms, not comparable. So convert it into a convert it into a rupee at the exchange rate on the date at 48. Since it is at 48, you can identify what is the amount of interest which is paid in INR terms. I pay an interest of 48,000 for the dollar loan. If I would have borrowed in India from SBI in the local currency, I would have been paying an interest rate of 99,000. If I compare these two, 99,000 and the amount of actual interest paid of 48,000, this is actual interest paid in rupee. If I compare it with the 99,000, I'll be able to derive my savings and interest cost. Compare these two and get your savings. How much did I save? 51,000. 99,000 minus 48,000. I saved an interest of 51,000. No need of calculator, guys. 99 minus 48. Now, this I'll have to compare it with exchange loss. On dollar borrowing. Definitely, I have incurred some exchange loss because there was an increase in the value of dollar towards the end of the year. While this is a notional amount only used for comparison, this is the actual loss which I incur on the foreign currency borrowing. How do I calculate this? Total dollar borrowing, $20,000. What is the loss per dollar? 3 rupees. 45 became 48. It's 3 per dollar. So that is 60,000 rupees. Similar problem we have solved. We have taken different numbers, but this is a question which has given me different numbers altogether. Lower of these two should be considered as interest according to your IND AS 23. As exchange loss, to an extent they can be regarded as borrowing cost, which is 51,000. Lower of above shall be considered as borrowing cost. What is the amount of actual exchange loss? 60,000. Out of 60,000, 51,000 is being considered as interest or borrowing cost as per IND AS 23. The balance 9,000 shall be considered as exchange loss as per IND AS 21. Out of the total exchange loss, on dollar borrowing, I have considered a part of it as borrowing cost, under IND AS 23. The balance of exchange loss should be considered as under IND AS 21. Under IND AS 21. Amounts please. Total exchange loss was 60,000. Out of this 60,000 in your local currency, that is your INR, I am saying to a certain extent I will treat it as borrowing cost. How much did you treat it as borrowing cost? 51,000 was treated as borrowing cost. The balance 9,000 is still remaining, which I will treat it as per IND AS 21 as exchange loss, which shall be transferred to P&L in the year in which it has incurred, that is on 31st of March 2022. Clear? So that will bring us to the end of first question. Let's move on to the next one. If you want to check the answer, you can. 9,000 remaining interest shall be charged to P&L. Guys, just a second, guys. If I ask you what is the total interest cost in the previous question, how do you write it? If my question is not just identifying the exchange differences to extent they can be treated as borrowing cost, but if I ask you to calculate what is the total interest cost, total interest or borrowing cost, then it should have two elements. The total interest cost is part A, actual interest paid on dollar borrowing, what is the actual interest paid? I paid $1,000, and the actual amount of interest was 48,000. Rupee 48,000. Part B, next one, exchange loss considered as borrowing cost. What is the amount of exchange loss considered as borrowing cost? Another 51,000. Out of 60,000 of exchange loss, 51,000 was considered as borrowing cost. Total amount will be 99,000, which is exactly similar to the amount of interest as per a rupee borrowing from SBI. Is it always the same? No. Sometimes the exchange loss could be less than the savings and interest cost. In such cases, it will not be exactly equal to the interest paid on the rupee borrowing. Clear? Look at the second question. Alpha on 1st April borrowed a 9% 30 lakh of loan to finance the construction of two qualifying assets. The construction commenced on 1st April 2021, the same date on which I have taken the borrowing. The loan facility was availed on 1st April and was utilized as follows for the remaining funds invested and the remaining funds were invested at 7%. Look at it. 1st April, the factory building, I've incurred 5 lakhs. Office building, I've incurred 10 lakhs. The total amount which I incurred is 15 lakhs. But the next amount I incurred only on 1st October. Again, I've incurred 5 lakhs towards towards factory building and 10 lakhs towards the office building. So if you observe, from the first investment on 1st April up to the second investment on 1st October, 6 months, the funds which I borrowed were idle. During this period, they have utilized the idle funds for investment temporarily at 7%. The actual rate of borrowing was 9%. Now the first question is, Is this a specific borrowing or a non-specific borrowing? Read the first sentence, you will be able to get it. Alpha on 1st April has borrowed 9%, 30 lakhs to finance the construction of 2 qualifying assets. So guys, this loan is specific to finance the construction of 2 qualifying assets. Had the construction of factory building and office building not been taken up, then Alpha Limited wouldn't have borrowed this 30 lakhs at all. Therefore, it is a clear indication that this loan is a specific borrowing. Whenever it is a specific borrowing, then the amount of borrowing cost eligible to be capitalized is equal to actual borrowing cost minus return on idle funds. So here you know what is a return on idle funds. You also know what is the amount of interest which is payable. Factory building 10 lakhs, office building 20 lakhs is the total expenditure. Let's try to calculate what is the amount eligible to be capitalized. Illustration 2. We will start with the sentence saying that borrowing at the rate of 9% of rupee 30 lakhs is a specific borrowing Why did you say it is specific? Because the question claimed that it was only considered for these 2 qualifying assets. Therefore, borrowing cost eligible to be capitalized is equal to borrowing cost eligible to be capitalized is equal to number 1, actual borrowing cost on borrowing, which should be reduced by minus less return on idle funds minus return on idle funds. So going with this logic, let us try to apply and let us try to calculate how do we identify the amount eligible to be capitalized. The first one is factory building. The second one is office building. Let's consider both and let us try to calculate. Factory building and office building. Let us start with borrowing utilized. How much of borrowing did I utilize in each case? For the factory building, the total amount of borrowing utilized is 10 lakhs. What about the office building? I utilized 20 lakhs. What is the rate of interest on this? Rate of interest is at 9%. Therefore, calculate what is the actual borrowing cost incurred. 90,000 for factory building, 1,80,000 for office building. This is my actual borrowing cost. this actual borrowing cost should be reduced by less return on idle funds. What is your return on idle funds? 7%, correct? At the rate of 7%. How many months were the funds idle? If you look at the question, the first tranche of investment was spent on 1st April. The second tranche of investment was spent on 1st of October. How much amount was spent? Factory building, out of 10 lakh of borrowing, 5 lakhs was spent on 1st April, so the funds were not idle. The funds which were idle was those funds which were invested on 1st October, which is 5 lakhs. Office building, 10 lakhs is spent at the beginning itself. The other 10 lakhs is spent only on 1st October, which were idle until 1st October, that is for a period of 6 months. So calculate 7% rate of interest on this. %7 into 5 lakhs into 6 by 12. 7% into 10 lakhs into 6 by 12. Calculate the amount of interest now. Guys, 7% on 5 lakhs is 35,000. 35,000 into 6 by 12 is 17,500. It has to be reduced, so I am putting it in brackets. 7% on 10 lakhs is 70,000. 6 by 12 only for 6 months up to October is 35,000. Therefore, the amount eligible to be capitalized 72,500, 1,45,000. This is borrowing cost eligible to be capitalized. Borrowing cost eligible to be capitalized. Actual borrowing cost minus return on idle funds. So therefore, this is the answer of borrowing cost eligible to be capitalized. Now, what was the actual expenditure on each asset? 10 lakhs on factory building, 20 lakhs on office building. Now that total cost should be capitalized along with the borrowing cost. So what is the total cost? Expenditure on building. Actual expenditure on the building is 5 lakhs for factory premises. Sorry, 10 lakhs. 2 times 5 lakhs incurred. 10 lakhs for factory premises. 20 lakhs for office premises. Therefore, the total amount of expenditure capitalized to the cost of the building is a total of these two. This is the amount capitalized as asset. Total cost capitalized $10,72,500 for factory premises and 21,45,000 for office premises. That's it. That will bring us to the end of the question, where we have used the concept of specific borrowing, actual borrowing cost reduced by the return on idle funds. Clear? Let's go back to the question and check your answer. Yes, 72,500 and 1,45,000. Answer is absolutely right. 10,72,500 is cost of the asset and 21,45,000 for office building. Let's move into our third illustration. Illustration number 3. Beta Limited had the following loans in place for the year ended 31st March 2022. Loan 18% bank loan was 1,000 and 1,000 at the beginning as well as at the end of the year. 16% term loan was 3,000 and 3,000, no repayment during the year. even on 1st April and 31st March. But there was a new debenture which was issued by the end of the year in the form of 14% debentures for 2000. What is the actual date on which they issued the debenture? I don't know. But it was not there at the beginning. It was there towards the end of the year. That means these 14% debentures were issued somewhere during the year. Correct? 14% debentures were issued to fund the construction of office building on 1st July. But the development activity has yet to be started. So therefore, these debentures were specific borrowing only for the purpose of an office building which were issued on 1st of July. But unfortunately, the development activities has not started yet. That means activities necessary for the construction of qualifying asset are not in progress. Since the commencement of capitalization condition is not met, the interest payable on 14% debentures from 1st July to 31st March during the year for 9 months is charged off to P&L. It is not eligible to be capitalized. On 1st April, Beta began the construction of a plant, being a qualified asset using the existing borrowing. Guys, they are using existing borrowing. That means these borrowings were not specifically taken for the construction of plant. Therefore, I will classify this bank loan and term loan both as general borrowings. Yes, if it was a specific borrowing, he would have clearly given that this bank loan or term loan was only for the construction of plant. But here, these loans were already existing and he has utilized them for the construction of plant. Therefore, they are general borrowings. Expenditure drawn down for the construction purpose was 5 lakhs on 1st April, 25 lakhs for 1st Jan 2012. You are required to calculate what is the borrowing cost eligible to be capitalized for the plant. For the plant, he is asking. 5 lakhs and 25 lakhs. Illustration 3. Let's start. First, let us talk about the debenture and tell that the debenture is not eligible to be capitalized since the development cost has not been incurred. %14 debentures was a specific borrowing for construction of building. However, I'm claiming that it will not be capitalized because the development activity has not yet commenced. However, the borrowing cost is not eligible to be capitalized. Borrowing cost is not eligible to be capitalized since, what is the reason? I won't capitalize this cost of construction or the borrowing cost to the cost of construction since the development of building did not commence. Since it hadn't commenced, there is no point of actually capitalizing the cost. So you can straightforward charge the amount of interest on this debenture to your P&L. Now, what about the bank loan and the term loan existing for the construction of plant being utilized? Now write the statement. Bank loan and term loan were not specifically taken for construction of plant. For construction of plant. Bank loan and term loan were not specifically taken for the construction of plant. Therefore, they should be considered as general borrowing. Therefore, they should be considered as general borrowing. Since you are considering it as general borrowing, what is the amount eligible to be capitalized? I shall capitalize only such amount of interest computed based on capitalization rate. Correct? If it is a general borrowing, then I'll have to go for capitalization rate. Here there are two borrowings, so calculate the capitalization rate here. What is your formula? Total interest on general borrowings divided by total general borrowings into 100. Correct? So let's start looking at the numbers then. Look at the numbers that we have in the question. 1000 bank loan carries an interest rate of 18%. 16% term loan carrying a total amount of 3000. Calculate. 18% into 1000 plus 16% into 3000 divided by 1000 plus 3000, which is the total non-specific borrowings, multiplied by 100. Calculate, guys. How much is this? This is 180 plus 16% on 3000 is 480. Total interest is 660 divided by 4000 into 100 will give me a capitalization rate of 16.5%. Will give me a capitalization rate of 16.5%. Since you got a capitalization rate of 16.5%, that is where you have to start identifying the amount of borrowing cost eligible to be capitalized on the amount of plant. Borrowing cost eligible to be capitalized to the cost of plant. What is the amount of borrowing cost eligible to be capitalized for the cost of plant? Now again turn back to the question and see what is the expenditure incurred on the plant. If you look at the expenditure incurred on the plant given towards the end, he says I've incurred 5 lakhs on 1st April and 25 lakhs on 1st Jan. Guys, 5 lakhs on 1st April, you are spending it throughout the year. But to the extent of 25 lakhs, which was utilized on 1st of Jan, you are only utilizing it for 3 months. So calculate using 16.5%. First one, 5 lakhs into 16.5% throughout the year. 25 lakhs utilized on 1st Jan, same rate of capitalization rate, but only utilized for 3 months. Calculate the amounts. 5 lakhs into 16.5% is 82,500. 25 lakhs into 16.5% into 3 by 12. 1 lakh 3,125. Therefore, the total amount eligible to be capitalized is 1 lakh 85,625 is the total borrowing cost which is eligible to be capitalized to the cost of the plant. Cost of the plant already incurred 30 lakhs plus 1 lakh 85,625. Therefore, the total cost of the plant is 31 lakh 85,625. Total cost of plant on 31st of March is equal to, how do you calculate? I have incurred 5 lakhs on 1st April. $5 lakhs on 1st April. Plus I incurred 25 lakhs on 1st Jan. Plus borrowing cost eligible to be capitalized 1 lakh 85,625. Therefore, the total cost of plant which is capitalized is 31 lakh 85,625. That is the total cost of plant capitalized. Clear? That will bring us to the end of illustration number 3. Look at illustration number 4. X is commencing a new construction project which is financed by a borrowing. Key dates are as follows. 15th May, the loan interest related to the project starts to be incurred. Borrowing cost is incurred on 15 May. What are the 3 conditions for commencement of borrowing cost? Borrowing cost should be incurred. Expenditure on qualifying asset is incurred. Activities necessary for the construction of qualifying asset are in progress. Only when all the 3 conditions are satisfied, we will start capitalizing the borrowing cost towards the cost of the asset. So 15 May 2021, loan interest relating to the project starts to be incurred. So first condition satisfied, borrowing cost is incurred. On 2nd June, technical site planning commences. Guys, site planning also is an activity necessary for the construction of qualifying asset. So another condition has satisfied only on 2nd June. But on 19th June, they started incurring the expenditure on the project. So therefore, and on 19th June, all 3 conditions are satisfied. First, borrowing cost is satisfied on 15 May. Activities necessary for the construction of qualifying asset are in progress on 2nd May. Expenditure on qualifying asset is incurred on 19th May. Therefore, all 3 conditions are necessary to be satisfied for us to start capitalizing. So only 19th May should be considered as the date on which you start capitalizing the borrowing cost. Clear? That's it, I guess. Will bring us to the end of illustrations, guys. There's an example here. Just see the example. If probably there could be some value addition to it. H Limited, a real estate company, gives an immovable property on rent. Immovable property is land and building. It completed on May 31st, 2021, a commercial complex consisting of various offices which could be rent out. It expects that the commercial complex will be completely rented out by 30th of June 2021. However, due to adverse market situations, only 10% of the commercial complex could be rented out by the reporting date of 31st March. H Limited wants to capitalize the eligible cost up to 31st March 2022. Is it possible, guys? Only 10% could be rented out by the end of 31st March 2022. Is he eligible to capitalize the entire borrowing cost? No. If 10% has been rented out, that means the asset was already ready for its intended use. So therefore, you cannot capitalize the entire borrowing cost which is paid up to 31st March. H Limited should capitalize the cost only up to 31st of May. That is the date on which you are expecting to completely rent out the property. Borrowing costs incurred subsequently should be charged to P&L. Clear? And that will bring us to the end of questions or illustrations that we see along with IND AS 23 to help us understand the concepts of IND AS 23 and their application better. But now, let's move into workbook problems. Workbook problems are equally important, guys. So let's move into them. So let's make sure that we are having a better understanding of what each question is. You might get a few questions which are repeated, a few questions which are tested on the same paragraph again and again. See, fundamentally, the standard is so small that they can only test you on either commencement of capitalization, cessation, suspension, borrowing cost eligible to be capitalized, on qualifying asset. That's it. Beyond this, there is no possibility of actually testing you. Yeah, one more is that exchange loss to the extent it is eligible to be capitalized. So these are fundamentally the framework of the question of the entire standard, and beyond this, there is no question which is eligible to be asked from this particular standard.